Good morning, traders. This is Shegun Chart 247. I train traders how to trade in harmony with the market. Today, in this quick video, I will explain to you how I use Fibonacci retracement to enhance my trading strategy. Fibonacci is very important to the way we trade at Chart 247 Academy because number one thing I'm going to show you today how we use it is we use it in a trending market, which is the video today is going to be based on the trending market, okay? And we use it to spot buy zone and sell zones depending on the trend. If we have an uptrend, we use the Fibonacci to spot the buy zones, level of retracement, and also the second thing we use it for is to give us an expected area of profit taking. The Fibonacci retracement tool is perfect for traders looking to optimize their entries and exit both in bullish and bearish market. So let's crack on with it. Okay, I'm going to draw on the chart. Okay, this is for traders that already know how to trade. Okay, so a simple way of identifying a trend is what is an uptrend, a series of higher highs and a higher lows. Okay, so let's draw an uptrend, okay, or a potential uptrend. So let's assume for some reason your strategy is telling you you have an uptrend, okay, whatever you use, maybe you are using a moving average or you count the waves the way we count the wave. So this is the last high. The correct way, okay, to do your Fibonacci is to draw from the low, the starting point, to the high that started the pullback. Okay, that is the way to do it. So the another thing that I'm going to quickly share with you here, let me put this on the left, labels to the left so you guys can see it. Here are the numbers that we use. Okay, the one I'm saying it now, the 37.5% is the only number that I have included because I believe this is a strong number. This is a strong Murray level actually. So we use the 37.5, the 50%, and 61.8% as a retracement buy zone in an uptrend or sell zone in a downtrend. This example that we've done, this is an uptrending market. Okay, so we can do this just to complete the drawing of the trend. All right, so this is the last level I'm measuring because you would think like this: we are not involved in this market. We want to look for a potential opportunity after a discounting. So we would expect the price to come into this zone, and once the price gets into this zone, then we will now start to look for an opportunity to buy in the direction of the trend. This is the way we use the Fibonacci as a, a determinant which gives us an area where we should be expecting to buy, okay, in an uptrending market. So that is the first thing we're going to do. Let's do the other one, which is in a downtrending market. Basically, what we are doing is we are just flipping this on its head. Okay, so let's draw a downtrend. So let's use this side. So this is a price is coming down and it's coming down. Okay, so this is the last swing and we're expecting to find somewhere. Okay, we are looking for an area to sell from. You don't want to be selling just anywhere. The Fibonacci give you a high probability area where you should be getting involved in the trend. So this is the last valid swing that has given us a pullback. So we drop from the high, the last lower high or a higher high, and to the low. And we are looking for price to come into the sell zone. This is what we call the sell zone in a downtrending market. The first thing you have to do, and I'm going to type on this chart, okay, this is what we do. The number one thing is identify the trend. Okay, that's the first thing you do. Then if it's an uptrend, we draw from low to high. Okay, down, you draw from high to low of the last swing. Okay, then you'll be able to draw out your buy and sell zone using the 61.8, the range between the 61.8 and the 37.5. So this is an uptrend, this is a downtrend. So that is the first thing we use the Fibonacci for. Okay, so let's quickly go to the next thing we use the Fibonacci for in terms of a target tool. So let's use the uptrending market. So we have our buy zone here. So, let's say we bought the market and the retracement came to, so price came into the buy zone and they bought it. Let's just make it dramatic a little bit as they normally do. Okay, they came back, you came in, you put your stop loss at the structure, they manipulated the low a little bit, they gave you a little bit of pain, which area, and the price started going up. So we have a break off or a change of character here. Where should you be looking to target? Let me delete this because this is very important. Let's delete the lines, the downtrending lines. This is not scripted, guys. I like to do my teaching this way. This is what we do at Chat247 Academy. We don't write scripts, okay? I like to trade and I train people the way I trade. So that way you can get the true feel of myself and you can learn if you are open-minded. Okay. So now you are in this market, you are buying this market. Where should you be looking for target? This is what we call the first target, this area here, and that is the minus 23.6%. Okay, and this is the second target, minus 61.8% of the move. Okay, we've put minus there because we don't like to reverse the Fibonacci. Okay, so those numbers are very important. Once we draw it up here, then this will project itself. I have other lines here. This is what we call the strong line. Then I'll use let's use the template quickly, key ratio. Then you can see the the lines are drawn out and labeled. This is the extension one. If the trend is very strong, okay, we expect the trend to get to these areas. But in terms of an average trend, you expect the price to get here. If it breaks here, this is the next level. This will hold the price if the price has stopped here first. Okay, that is more of an advanced way of using the Fibonacci. But what I'm teaching you right now, if you want to use it now and now, okay, just think of projecting your first target to the minus 23.6. You can take 50% of your profits here and start to trail. That way you will catch more profits than ever, okay, than you've ever done. Okay, so that is the way we use the Fibonacci in terms of a uptrending market. Let's quickly do the same thing on the downtrending market. So I'm going to draw quickly. Okay, so let's say we have a downtrend and the price is, let's do the same thing. We had a pullback. So let's put our Fibonacci from the high to the low, and the price came into the sell zone. Remember, why is this a sell zone? Is because that is the 37 to 61.8% area. This is, doesn't mean price will come here all the time, all right, but this gives us a higher probability of a nice correction. The manipulation will have happened before the price get to the 61.8 in most cases. Okay, and if the price is going in our direction, is going back, let's say we have a change of character, something different to what we drew before. Let's say there's a break here and you enter the trade, you place your stop loss at the last structure. Initial stop loss is always meant to be at the last structure. Where should you be targeting? This is the T1, like I said before, minus 23.6. And what we teach is what works on the upside, especially for price behavior students. You always have to have this in mind. What works in an uptrending market will work in a downtrending market. And that is the simple rule to follow. So we have the T1 here, the T2 here. Okay, I, I shouldn't say much more than this. The other lines are for advanced trading. Okay, and the what we are showing you today, if you can apply this, simply wait for price to get into this zone, you will get out of a lot of trouble. Because some people, the problem people have is they are looking to sell this thing here. They are looking to sell here because while this is a this is an ideal world. Okay, why this price is going up, it doesn't travel in a straight line. You can, some trend, where's the marker, let's use this one. Some trend will do this on its journey, and every what I've learned is from my student, and I've done it before in the past. Every move like this, because you saw this trend, every slight one candle or two candles in that direction, people are jumping in and selling. But if you have the Fibonacci on your chart and you say to yourself, I will not get involved in this market unless the price trade into this zone, then you will save yourself a lot of headache about jumping in before the price materialize, or before the pullback is actually verified. Okay, so the Fibonacci tool is a very or Fibonacci retracement tool is a perfect tool for traders looking to optimize their entry and exit both in bullish and bearish trends. Guys, this is a short one this morning. If you like what you see, give us a thumbs up. My name is Shogun Chat 247, and I hope to see you in the next video. God bless.